In today's interest rate markets, let's take a look at the 10-year note futures today as they're realizing some further selling pressure here. We're seeing them down now for a fourth consecutive session and pushing down to the lows that they realized on Friday, just off those lows currently, right around the 131.28 level. And the selling pressure continues across all the different durations as we're seeing, again, rates pushing higher across all the various durations in the treasury markets. When you look at some of the factors playing into why I think we're seeing the selling pressure on the 10-year today, the couple things. Stimulus measures coming to fruition, it appears. So the market's still digesting that. It looks like it's going to come through basically what the market had anticipated, just around $2 trillion. And the market's still trying to weigh how that's going to impact the economic structure moving forward, and also the inflation front. And I think that's another thing why you continue to see this volatility within the interest rate environment. Couple that with the dollar continuing to climb higher as well. So we got a couple of things here that are causing disruptions within various asset classes. And I think that's why you're seeing, again, this persistent selling within the interest rate environment as we're seeing the treasury markets adjusting for what is perceived to be a pickup in debt structure in the United States and a pickup in inflation as we see some of these measures unfold. Looking at the yields today, we're looking at a 10-year at 160 basis points. So as I mentioned, just off those recent highs, which is just around 163 basis points. But the really interesting thing today, I think, is when you look at the price action within the curve itself, it's really the shorter to the middle of the curve that's having the biggest sell-off today. You look at the 2-year, the 3 years, the 5s and the 7s, we're seeing quite substantial selling pressure across those different durations as we're seeing, again, the basis points. When you look at, say, for example, the 7-year, we're looking at the 7-year up about 5.5 basis points, really more than the 10-year today, pushing up. So again, some substantial shifting of the dynamics there within the pricing structure as we're seeing the middle of the curve really selling off more so from a percentage standpoint than the front end or the back end of the curve.